So we've grown up, or we've gone into life being given the impression that life insurance is only for us to die, so so whoever is left behind can benefit from it. But that's really not true, because there are different kinds of life insurance. So it depends on which kind of life insurance that you end up with or you end up signing up for. So we have, most of the time when I talk to people about what I do, wealth creation and all that, and when we get to the piece that has to do with life insurance, most people run for the door. If you're on Zoom, sometimes they drop off because they're afraid of death. Death is inevitable. We can't avoid it, just like taxes. Death and taxes are the surest thing that we'll ever get to do. But I want to break down the different types of life insurance. Most people will tell me, oh yeah, I have life insurance at work. That's called group life insurance. So yes, it's cheap. Sometimes you don't even pay anything for it because your employer is paying for it. But the downside of it is that when you leave that job, you don't have the insurance anymore. So if you don't have a portable life insurance that you can take with you, you're basically left with nothing. Most of those don't even pay out. They pay out maybe 2% of those pay out, because if you don't die on the job, your beneficiary doesn't get anything from it. If you get sick and you're not able to work, you don't have the insurance anymore. And there are many more downsides to group life insurance. The second kind is term life insurance. Term, just like it says, term, temporary. You basically design a certain number of years, betting on your life that you're going to live for 10, 20, 30 years. So you do a 10-year term, 20-year term, 30-year term. If you outlive the policy, you lose all the money that you've put into that policy. There are some in-between benefits. You can have living benefits attached to it, where if something happens, you can benefit from it. But when that term ends, you don't have that policy anymore. Most people who end up in a nursing home in their 60s, if they miss a payment when they need the life insurance the most, they don't have it. So then again, about 0.2% pays out for those types of life insurance. The third type is whole life insurance. Whole life, is a little bit more on the expensive side. The advantages are it goes up to age 100. You may have some cash benefits out of it. You may not, depending on what kind of whole life it is. Then again, you pay more. You're not guaranteed having a death benefit and a cash value out of the policy. You don't get both. The last type of life insurance that I'll talk about is the Index Universal Life. Index Universal Life has a lot of benefits. First of all, the advantages of it are that it's a tax-free retirement for you. You can avoid the probate process, and we do have a video where I had talked about the probate process. You can use it for living benefits. If you have a critical, chronic, or terminal illness, it will pay out while you're alive. You can use it as a retirement portfolio, like I said. People who have kids can use it as a college fund for their kids. Business people or business-minded people can use it as a vehicle to borrow from or to withdraw from your policy. So basically, you're your own bank. You borrow to yourself, and you pay yourself back at a low interest, and sometimes that interest gets refunded. You can also use it for flexibility as an emergency fund. When you get to a certain point, you can use it instead of going to the bank and paying a high interest. You can actually go into this policy and get it. So literally, the death benefit on this policy is the last option. If you outlive all of these things, or you don't benefit from all of these things, at the end of it, your beneficiary can get the death benefit. So it's really not about death. It's about you living, because while you're alive, you can benefit from this policy. So this helps to kind of separate the different types of life insurance a little bit, so that people don't have this stereotype about life insurance being all about death. We don't want people to only think about death. We want you to live while you're here and live a fulfilled life, but also protect yourself, because this is income protection. You're protecting yourself in case you're not able to work. People who are the breadwinners, if you lose both limbs and you're not able to work, you lose your income, you lose the job, you lose your income, you lose the insurance that you had at work. But if you have something that's portable, You have that to replace your income. That way, your family doesn't go destitute. Your family doesn't have to live below the standard that they lived at before. They have something to protect them. So I'm going to leave it at that because each person is different and each person has to customize their policy based on their circumstances.